Hey everyone, hope you're having a great day today. It's September 29th, 2024. It's a Sunday. So we're going to just start off looking at the ES futures here. And the topic is going to be just proceed with extreme caution. Looking at a 4-hour chart, we can see that we've got a pretty good divergence going on here. Price is continuing to rise, but our indicators are actually falling right now. And we can see this by looking at the after hours trading added in here. If you're looking at the chart and you do not have after hours turned on, you're not going to see this. It's basically just going to show the uptrend. It is going to show the change in the crossover on the MACD right here, which actually turned yesterday. So that is something to note. You just need to have some extreme caution here as far as staying long the next few weeks. A couple other things to look at. The NASDAQ also tells a very similar story. We have the same type of rising price and the divergence. If we want to look at just turning the extended trading hours off, it's also the similar thing. We're probably going to have a crossover occur on Monday if we have any type of a flat or a down day. And if we want to look at the Russell is actually following its trend down right now. So it is actually obeying to the indicators. And it doesn't matter if you have extended hours on or off. It's pretty much obeying them. So if we want to dig a little bit deeper and look at the sectors up the S&P 500, so the end of the quarter actually is this red line right here on the chart, which was last Friday. So it's conveniently easy to spot what kind of happened last week in all the sectors. We can see that roughly the XLY here had a pretty good week. The XLV, which is the healthcare sector, had a pretty big drawdown, as well as the real estate sector right here. And then energy had a pullback right here. But this kind of just shows us, where money is flowing into and out of in the markets. Kind of let us know what's going on there. And lastly, I want to look at the VIX just for a few seconds here. We can actually see on Friday, VIX actually climbed pretty big, had a pretty big rally there. So volatility did increase into the close on Friday. So we need to be just kind of paying attention to that. You don't need to ignore volatility climbing going into the close on Friday. So next week also could be kind of wild as well. Looking at news next week, have quite a few things happening. Just a number of things coming out. You have a number of FOMC members speaking all throughout the week. And then you also have just a lot of news announcements coming out pretty much almost every day. So all of these can also move the markets too. And this really just adds to the volatility in the markets as well. And lastly, we'll look at some cash secure put candidates. Right here, we're 2% out of the money, 10/18 expiration. So that's 19 days away. And this is just a list of some ETFs right here that I have. And then next we'll go to, this is what I like to call the weeklies. And these are just the S&P 500 stocks that offer weekly options expirations. So that means that they have options expiring roughly every single Friday. And the reason I like to look for those is because those tickers that trade and have expirations every Friday normally have more liquidity. So it's easier to get into and out of those trades. So we're once again 2% out of the money, 10/18 expiration. And I'll start scrolling down slowly here and I'll go over kind of what is seen. So first of all, our symbols are all listed in alphabetical order. We have the last price, the 52-week high, the 52-week low. We have Friday's close. We have the percent change on Friday. If it pays a dividend, it'll be listed right here as yield, the expiration date. This is the strike that it has found, as well in the bid and the ask for that strike to let you know how wide that is, maybe let you know if it's going to be easy or not to get into. We have the return on capital for that trade, the annualized return on capital. This is just telling us that it's 2% out of the money or greater. We have the strike price listed again right here. We have the percent move from the current price to either the 52-week high or the 52-week low. 19 days to expiration. This tells us the delta of that cash secure put trade. Anything below a 30 delta is going to highlight green right here. We have days away from earnings listed, and this is going to be trading days and not calendar days. So like right here, this is 4 days away, so that's probably going to be Thursday, I would imagine. Next, we have the RSI, and then we have the IV percent. Then after that, we have the cash required to enter the trade. We have the cost basis if you are assigned, and the % discount you're getting on the stock from the current price. So that's all I have for you today. Thanks for watching. Have a great day and bye.